Alright, thank you for joining Ascending Abundance YouTube channel. My name is Pavel Sverdlin, and in this channel I explore various strategies of creating additional capital gains, income streams through business, real estate, investing in stocks, crypto, anything that can give us more money as opposed to spending less. I would prefer more. This is a second episode about VIX investing. This is VIX Futures kind of strategy that works for me. Has been making money consistently over the last number of years, and I'm ramping it up. I'm just hoping there's going to be another spike, because when VIX spikes, as you can see, it goes down, and that's where I short those futures, and that's where the money is made. At the last spike I made tens of thousands, if not hundreds of thousands of dollars. So for this one, I'm just waiting for the next spike. So what do we do as we wait for the spike? This is VIX long term, as I was saying in the previous episode. Anything above kind of 30 is fairly rare. Anything above 30, 35 is fairly safe. You can short it and kind of write it down. It doesn't last long. Those peaks, they do come up. You might be in the negative for a while. If you short it, let's say at 30 or even 25, goes up to 50, you lose money temporarily, but then it goes straight back down, and within a matter of days you're back in the positive, and you can play this yo-yo anytime you want. It always goes down. You just need some patience to wait for it to go down, and some margin on your account to survive those episodes of spikes. What I wanted to focus on today is more of a kind of the intraday trading. So if, as I was saying in the first episode, if something new happens in the world that never presented itself, like a subprime crisis in 2008, like a COVID crisis in 2020, investors panic. This is a systemic risk. The whole world could fall apart, and it could. It's not like people are completely irrational. This is rational. There could be a systemic risk. However, those instances are very rare. As you can see, they're like 10 years apart. Anything in between can be tradable. So what I made a rule of thumb for myself: if it's something completely new that I've never heard of, wait for the huge spike. If it's a banking crisis like we've experienced last week, with Credit Suisse going kind of down and a couple of American banks are going down, that is not new. It's quantifiable. There's Federal Reserves with all of its program. The central banks in Europe, they know what to do. They know how to inject liquidity into the system. This is manageable. It's still a spike, but it's a small spike. Look at it. We've gone up to, what, 30 something maybe? Well, actually, here's the better view. This is weekly. Let's do daily. So daily view for the last weekish or so, we've barely gone up to 27, 26, 25. So these levels are very much tradable. You know, this is not a risk that is tremendous. The previous spike was back in October. So we're saying even between these spikes is like 6 months. So how do you trade VIX? When you see something going above 25, you know it's kind of time to take a look at it. If it's between 25 and 30, it's probably short the ball. If it spikes up real fast within a matter of a day or two and goes above 30, 35, that's amazing. That's the wonderful entry point. You can just get in there and short it all the way down. You're probably not going to short it at 35. You're probably going to short it at 30-ish or 27-ish or whatever. It might take a couple of days to settle down, maybe a week. But then as it goes down, and it always goes down, even after huge spikes like this, it always goes down. That's when you make money. On the intraday scale, and this is kind of the topic of my today's discussion, on the intraday scale, how do you time it? So these are 5-minute bars, and literally I've taken just the yesterday's experience. So we're looking at sort of the daily. What I noticed, and this is sort of my own observation, different stock markets start and end at different times. Asia starts trading at 6 p.m. on like Toronto time, so I'm in Toronto in Canada, same as New York. So in New York it's 6 p.m. in Toronto at 6 p.m. This is when Asian markets open up. They trade overnight and they close at night as well. Like they close before we even start trading up here. So they're hardly tradable because I don't want to trade at night. But you know that when they close and then the Europe opens up, there's gonna be these breaks, this either spikes or bottoms, and those are good entry points. So at 4 a.m. Our time, that's when the Asia stops trading and kind of everybody else join in. So that this is 4 a.m. So they started at 6 p.m. At 4 a.m. Europe joins in, but then come the next day, 9:30, markets open. That's the time that VIX usually kind of goes down because the futures traders are more savvy. They use computerized programs. They just create so much more volatility than the regular market. There's too many participants in the regular market hours. Not everybody's trading on margin. Not everybody's using futures. So it's easier to actually trade VIX on that break at 9:30 when the markets open up. Then it just sort of goes down-ish till 10 or so, even 11, 10 o'clock. Then it starts spiking. Why does it start spiking? Because Europe is checking out. Europe is checking out at our time is 11 o'clock, 11:30, 12 o'clock, 12:30. That's where the Frankfurt and the Paris and the Luxembourg and whoever else is closing down their stock markets. At the closure, especially on Friday, they typically want to close some of those positions. They want to close it quickly. They're doing it within the last 10-15 minutes of their market closure. So from 10 to 12-ish, and then up to 2, the market typically spikes. Then Europe had checked out. Everybody closed their books. They transferred their positions over to New York. The volatility sort of subsides. It goes down. Everybody takes a breather. Maybe there's lunch in New York or something that they're having. There's typically kind of this lull between 2 and 3 o'clock. 3:30, that's when our markets are starting to close. So again, towards the closure of the market, typically volatility spikes, goes up and up and up. Not always. Sometimes there's this dump at the end. So whatever the time I'm showing here, sometimes there's a dump at the end when volatility actually goes down. It happens. In the last like 2 to 3 to 5 minutes, sometimes what I've seen is a big spike before that and then the drop of volatility towards the end of the day. And these patterns, they kind of continue every single day. They're not always the same. Sometimes you would see that in a typical day there will be a spike, let's say in the morning, like this chart. The spike goes on and on and on, and it's just kind of sort of levels off. The market opens. The volatility sort of continues to subside. 11 and 12 o'clock, that's when Europe checks out. You can see this spike up, and then there's again a kind of a continuous decline in the volatility all the way down till our closure. A little bit of a bump during the closure time. See, this is people closing their positions, and then sort of until 6 and so on, the market continues. It's hard to read. We don't quite know if it's going to spike necessarily between 10:30 and 12 o'clock, or is it going to spike or reduce the volatility towards the market closure. But you can watch those times. You can see how the pattern sort of develops. If you can see that between 11 o'clock and 12 o'clock the volatility kind of keeps on creeping up, then you know that around 12, maybe 12:05, that's probably the peak. And if you want to enter a short position, that's the best time to enter that short position. Ride it a little bit down. Then around 2 o'clock, check out again. There's been a spike. Here's 2 o'clock, right? There's been a spike around 2 o'clock. Europe completely is out. I don't know which other markets closed down. There's a bit of a spike, and then you kind of know it's gonna go downhill from there till about 3. 3:50. That's when it's tough to read the market, because towards closure something may happen. But that's how you trade it. These are the spikes, and these are the timings of the day when you can scalp the VIX, and especially on a volatile day, you can pick up $1.50, even anywhere in between is fine, right? $500, $1,000 on one futures contract. It's totally achievable. It's kind of scalping the market. You can go in and out a couple of times a day. I've done that before. So this last week I was shorting VIX occasionally, almost daily. I would not short it at the peak. I wouldn't get it at 27. Maybe I would get it at 25. Just kind of wait, grind my teeth, wait until it goes back up, back down, close the position somewhere here, wait a little bit, open up the position here, see it rise, wait a bit, maybe a day, maybe sometimes two, wait, it goes down, I close the position again. Make $1,000 here, $1,000 there, maybe 1,500, maybe 500. But it adds up. In a week you can make a few $1,000 easy just on one single contract. And so long as that you know that this volatility is not caused by something new, something ridiculously new that nobody knows how to deal with. If this is a known, previously seen black swan, then there are techniques to manage it, and you know that VIX is not going to spike till 80 or go even beyond. So let's go weekly. You know VIX is not going to go up here. You know it's not going to be 90. It's not probably going to be 50. It's highly unlikely to hit even 35 or 40. And if it does, I will short the second contract. It's really risky to trade VIX with small margins, margin on your account. But if your margin allows you to, you can enter into 2, 3 VIX contracts as it rises. So if it went up to 26, 27, 28, you shorted it, it continues going up, now it's at 37, maybe you put in a second contract. So long as the news allow you to, you can average up and then see this VIX just slide back down and you make even more money. That's, I believe, a clear and fairly easy way to get rich, so long as you don't mistake a typical issue with a very rare event. And if you do see this spike, hopefully you have enough margin to enter multiple contracts at the high enough levels to watch your portfolio then scale up as VIX subsides within a matter of days and weeks. Thank you so much for watching. This is one of my strategies. I'm going to continue covering VIX because I find it extremely profitable and I've spent years watching it, and it's one of the best strategies so far that I've observed in the market. Thank you so much, and if you have any questions, reach out, comments, likes, hit subscribe button, and I much appreciate your time watching this channel. Thank you.